Good morning, afternoon or evening depending on where you are in the world watching this right now, and welcome back to another video on my investment portfolio channel. What the hell is going on? Nothing actually makes sense to me anymore. Look at this chart. Just deep it for a second. Look at that drop from like 6.5% gain all the way back down to a 2% gain. On Friday afternoon when the US markets opened and I saw that rebound, this small rebound here, I actually just started laughing. I think everything that I thought that I knew about the stock market just got flushed down the toilet. I mean, I understand why the stocks are fluctuating, but the reasons to support some of these ideas make little to no sense to me. If the market continued to fall on Friday, then it would have made it easier to comprehend, but what's the point in it going down on Thursday just to make up for some of the losses on Friday? I just don't get it. So let me just tell you my understanding of the market so far. So right now, as I'm speaking in June, we have priced in or partially priced in the recovery of the economy through the creation of a vaccination that many people believe we'll be getting by the end of the year, right? But in the back of our minds, and when I say our, I'm talking about us, the investors, etc. In the back of our minds, we are wary about a second wave happening. And along with Jay Powell's comments this week about bracing us for a sluggish, long recovery back to normal, whatever constitutes as normal in the future, this is essentially what catalyzed this fall on Thursday. Now, the reason I say catalyzed is because we had several fairly good growth sessions in the last couple of days and weeks, and then the market started to boil. So I guess you can say that on Thursday, we turned down the heat on the cooker a bit, and not completely off. Hence the slight rebound on Friday. I kind of like that analogy, I'm proud of myself on that one. But yeah, I also understand that this V-shape or Nike swoosh shape recovery, whatever you want to call it, isn't going to be straight all the way. I know we're going to have some peaks, we're going to have some troughs. There's going to be some external factors affecting the regain, like the RONI, as I already mentioned, US, the United States versus China round 2, the election years this year. So I know Trump's trying to get the market in a favorable position so he gets elected back into the office. So all these factors have some sort of effect on the market. I know that, but I don't know. But that's just my understanding of the situation right now. I'm still fairly new to all of this, but that's just the way I see things right now. And I think at the moment as well, companies have kind of moved past the idea of how they're going to survive this downturn. It's more about now how quickly they can recover from this situation. But the thing that gets me, right? Hear me out on this, right? We haven't even gotten out of the first wave. So if you are so seriously worried about an episode of a second wave happening, then you better protect yourself. Wear your mask, wash your hands, social distance. It's all very simple. I appreciate that there are certain circumstances where people may not be able to abide by this, but for the majority of us, it's something that we should be following as best as we can. So if people are so scared of this second wave happening, then just protect yourself. That's all I have to say. But yeah, back to my confusion part a bit. What kind of frustrates me the most, I don't know if frustrates is the correct word I should be using in this context, but what frustrates me the most is that well-built companies, the Apples, the Amazons, the Microsofts, the companies that you can see performing well at least over the next 10 years, suffer along with the rest of the market. Companies that are well built with good balance sheets, well managed, should not be, in my opinion, falling at the same time all these other stocks are falling. I mean, over the last couple of weeks, we have seen that these companies do have the resources to survive this type of environment. So why do they fall too? That's another part of my confusion that I just don't get. I know on a weekly basis, this week especially, they've done well. I think most of the good companies are positive. But on that day, on Thursday, they fell. And I just can't think of a good reason as to why they fell. I think there's something I'm missing, or maybe I'm just refusing to wrap my head around the idea that this is just something that happens, and that speculation and fears is a bigger driver in the stock market than the actual fundamentals of a company. On the flip side though, this is great, right? If you are investing in well-built long-term companies, this is good news. It means you can buy more shares at a lower price, And I think this is where I love the ideology of dollar cost averaging, or in my case, pound cost averaging. If you also follow the idea of lump sum, I don't know if is there a technical name for that, but you get what I mean when I say lump sum. If you also follow that type of process, then I guess this is also a good opportunity to restock on some of the investments that you've made. Obviously the market might drop lower, so this is just why I enjoy the process of averaging my way in, because you never know how low the market can go before it reaches the quote unquote bottom. But personally, I don't see the market reaching that bottom that we faced in March again. But yeah, during this period, I'm just going to restock up on some of the investments I already have, and maybe look at some more risky companies that I've mentioned before. The companies that have been hammered because of the virus but have good growth prospects when everything is back open. But yeah, I know of course not all companies that have been badly hit will recover, so I have to be conscious about my decisions there. Yeah, but anyway, enough of that. Let's look at my portfolio. I'm not going to go through 3 of my top winners and top losers this episode, because the majority of them have moved in parallel with the overall market. But let's take a look at my biggest winner and loser this week, and then I'll probably just show you the companies that I have on my watch list too. So my biggest winner, or top winner this week, was Amazon, which went up 2.5%. Now this week, Amazon mentioned that they were going to start providing police facial recognition systems for I think about a year, and that they made use of this time instead to reform their regulations. I think other companies are doing something similar too, like Microsoft, who mentioned that they were going to limit what they are allowing the police to use. There wasn't any mention of the Black Lives Matter protest within their statement, but I think it's pretty evident that this is coming off the back of that. And without getting too much into it, I think this is a good idea and hopefully acts as a point of action which leads to much more. Alright, so if we take at our biggest loser this week, which was InMode. I swear I talk about this stock every single week. It's either a top winner or, as we can see this week, a top loser. And like previously, there's not too much news around this, and my assumption is that the trend of this stock largely stalks that of most prominently the S&P 500. So yeah, not too much to say about that. But yeah, it went down this week about 12%, so not too great. But yeah, it's a company that is in my risky portion of my portfolio, so I only allocate 5% of my overall pot investment to this. And yeah, this is a section of my portfolio that I'm looking to add to during this small drop in the market. So I'll be making my next round of investments on Monday, and I don't really care if the market goes down anymore, because I'll still continue to average down, and if it goes up I'll continue to average up, so it doesn't make too much difference to me. Alright, so let's look at my watch list. I've split them up into 4 different sections, so this is not my actual watch list, but I split them up into 4 different sections, as you can see here. So firstly, I've made a split between stocks I consider growth stocks and stocks that I consider dividend stocks, and then within those I've broken them up into stocks that I can buy fractional shares of, and then stocks that I can't. And as you can probably tell from my portfolio, I prefer buying stocks in fractions so that I can easily balance them out when I need to. So most of these stocks here, I'm still in the early stages of researching them, but ones that I obviously want to keep my eye on. If we just have a quick look at the growth fractional stocks. So Nikola. Nikola, what an interesting stock. I don't know if I'll be investing into them. They're fairly new, and they're very risky in my opinion. So you know what, I might just add this to my risky portion of my portfolio. But yeah, I don't know. As I mentioned, I'm still in the early stages of doing my research on these stocks, but we'll see what happens. So these are my fractional parts of my watch list, and then we have the ones that aren't fractional shares yet. But yeah, I'll keep my eye on these stocks. Right, in other news, Europe is making some big strides in reopening transport between countries. Germany is planning to lift bans for 31 countries, Greece is 29, and the Netherlands are lifting bans for 12 countries. And over here, retail stores are being opened or being allowed to open on June the 15th. And in my honest opinion, I think that is a bit early. We have the second highest death rate in the world. I think it's actually, no, it's been moved down to a third. I think Brazil have overtaken us now. But I believe the government are more concerned about the economy. I mean, in April, as we just got the news, the economy shrunk by 20%. So it is a cause of concern right now, but it seems like they value the economy over the lives of individuals. Then again, it is up to us to stay indoors and prevent any risk of catching the coronavirus. But I feel like that could have been better reinforced if our government implemented better protection measures for us earlier and better. I don't think the government will look to have another lockdown though, in fear of worsening economic data. I guess we just have to make sure that we self-govern ourselves well enough in order to keep healthy and safe from this invisible enemy. Okay, so on Friday I was watching CNBC, and this guy Art Cashin, I think his full name is Arthur Cashin Jr., essentially blamed millennials for the drop on Thursday. Now, by definition, I'm not a millennial. I think the ages of I think the ages of millennials are like late 20s, early 30s. I think the term that he actually meant to target was Gen Z, Generation Z. And he said, and I quote, "Part of the market participation has been amateurs, millennials, people new to the market. All the buy was in the stocks that had been hit the worst. When things reversed, the sell-offs were sharp. The millennials were protecting themselves, and this is why the selling was so vicious." First of all, I think too many people abuse the millennial term without actually knowing the age range. And to blame a whole generation of people is, I don't want to say naive, because he's been in the market for longer than I've been alive, threefold. But it's kind of like saying the dog ate my homework, you're just looking for someone to blame. But he might be right, because we are in lockdown. A lot of young people, I think, right now are looking for ways to make themselves busy. So I guess a lot of people are investing in the stock market right now, and people that may not have a lot of knowledge about it are looking at the beaten down stocks and saying, "Oh wow, these are cheap, I might as well invest in here," because the growth potential here is significantly more than, I don't know, Microsoft or an Amazon, without knowing too much of the fundamentals. They're basically just looking at the graph and seeing how beaten down the stock is, and viewing the short-term aspects of that. But I don't know, I don't like the statement that Arthur made. I'm sorry, Arthur, but I just don't. And by last but no means least, Brexit is back in the news. So the government confirmed that there won't be an extension of the January 1st 2021 deadline. I don't really know what that means in terms of negotiation. I don't know how they're doing. To be honest, I'm not looking to hear any more news about Brexit. I think we spent way too long trying to get that deal over the table. Every morning when I woke up, Brexit would be on the news, and that happened for like 3 years straight. And then straight after we got this Brexit deal done, the coronavirus came. So in terms of news, it hasn't been too great. But yeah, we'll just see how that unfolds. But yeah, that's a quick update on my portfolio. Hopefully you've enjoyed the video, and hopefully you've enjoyed this new display of my portfolio as well. I've tried to put it in portrait mode, so if you're watching on mobile, it'll be easier to view. Hopefully that's working okay. But yeah, thanks, and I'll catch you in the next video in a bit.